It's 2026, well into 2026, February, and people are feeling pretty heavy. It's a bear market out there, folks. Well, at least in crypto and not in the rest of the market, it seems. Silver, gold at all-time highs. We had SPY at all-time highs, Nasdaq nearly there. But something happened at the beginning, sorry, at the end of last week that has people on edge. We had what was it, a 3 Sigma event, a 5 Sigma event, where things just went down. Gold went down, silver gave back some massive amount. Bitcoin, it was down, decided to go down even still. The dollar bounced up. Things looked a little bit toppy. And it makes sense. You know why? Because we're heading to a bear market, folks, or at least a topping pattern. Look, if you wake up one day and you look at the stock market and the stock market has been down 50%, don't be surprised. Don't be surprised. It can't happen. It will happen. It's happening right now. Look, I want people to understand, this is what matters to me the most, all right? What I want people to understand is that in a bear market, that's where you can make the most amount of money. That's where you can set yourself up for the next 50 years. If you're going to buy the top and you get, when you sell, when you're at an even higher top, you want to buy high to sell higher, that's tough. That's a rough situation. But when you're buying something that you believe has long-term value and you buy it lower, when you buy something that you believe has long-term value and you buy it lower, you buy it as low as you can, that's Black Friday discount, folks. That's what you want. You want to buy long-term assets at the lowest price possible. And the only way you're going to get that is in a bear market. So why on earth are people upset when things that they like fall? That's just what it is. Now, I get it. If your thing falls to zero, I totally understand. Right? You're holding on to Luna, you're holding on to SafeMoon, you're holding on to some penny stock or whatever, and it's not going the way you want to. I totally understand that. I get that. You're making a long shot bet. It didn't pay out. I hope you didn't put your kid's college fund inside of it. If you did, well, hold on. It's going to be over soon. But if you didn't, just wait. Just hold on. What I care about here for this bear market, I have my game plan. In the last bear market, I was not prepared. The bear market before that, I didn't even really understand what bear market was. I thought markets only went up to the right. But this time, I am prepared. And I want you to be prepared too. That means there's things you've been paying attention to that you had your eye on. That nice Gucci pair of glasses that you wanted to buy, now it's at a discount. That Rolex that you wanted to get, now at a discount. Now it's time to buy. Or now it's time to look at what you want to be buying. Because in short order, I think in the next few months or so, the story is going to start picking up. That the tide's going out and poor risk management is going to be shown. We're going to see what people are actually doing. Liquidations en masse, people leaving, losses in the billions and billions of dollars. And when that happens, you're going to get wicks to the downside that are going to be revolutionary. Just amazing buying opportunities. So that's what I want to talk about today, folks. We're talking about the bear market for Bitcoin and the coming recession for equities. All that and more in today's Sunday Fuel.
The year is 2020. As the old financial empires collapsed and crypto drowned in noise and false prophets, one man lost everything. And in that loss, he was called. Through the wreckage of his own failure and the precision of his charts, a higher force revealed what others could not see and entrusted him with a mission to guide others through the chaos he barely survived. They call him Sacred Prophet. And now, the revelation is yours to claim.
And we're back. Welcome, everyone, to Sunday Fuel for Sunday, February 1st, 2026. I am your humble host, Tom, Sacred Prophet Hartman. Joined, as ever, by my plucky sidekick and Aaron.
Nope.
Peter.
Nope.
Bad
Nope.
Guru, Hart.
Nope. Great Scott!
Not Aaron. Not Aaron in training. Not Aaron in training. Not Aaron in training. I will.
Can you be my Marty McFly to my Doc Brown?
I could be a Marty McFly,
There we
but
go.
I'm not Aaron.
Great Scott!
I'm the
Marty
acolyte.
McFly.
All right. You keep calling me something else. I'm the acolyte.
Peter, it started.
What has?
People who did listen to me before
Yeah.
about how Bitcoin is in a bear market
Yeah.
are pretty happy.
So almost no
Save
one.
yourself. Sorry,
Almost no one then.
pretty happy. And the people who didn't listen,
Yeah.
the non-believers,
Yeah.
the infidels,
Everyone.
the infidels
Almost everyone.
are messaging me saying, "Hey, I should have sold at the top.
Should have sold at the top.
Should have sold at the top." Which to me is beautiful. It means we're on track. We're on schedule, folks, for how things need to unfold. All right.
Okay.
It's not a bear market, though. People regret their past decisions. Ooh, what I could have had if I sold at the top. I could have
No.
sold at the top. No, you couldn't have.
Not nice. It's
Because
mean.
the last time you bought when it was rising. You didn't buy at the bottom. You bought when it was rising. So you're always going to wait for an even higher high. Hey, you're going to get that higher high next cycle.
You don't lose until you sell, right?
Oh no, you lose it if you never sell because you never get that money back. People say that. People say that, but that money is locked away. All right.
Well, it can come back. It can be back.
Well, when the stock market peaked in 2001 and then took 10 years for it to come back to that peak and then sold off again in 2009,
Mhm.
those people were like, "Oh, at least I held back to all-time highs." Yeah,
No,
it
you
was
got to
working.
hold. You got to hold it for 20 years. Everyone knows that. We're in a 20-year Bitcoin cycle. Everybody knows that. 20, 30, 40, 50-year cycle for Bitcoin.
No, Peter. All right, 20 years for a millennial now. They're gonna be in the grave. They're done. It's over. All right. And 20 years for the Gen Zers and the Gen Alphas. I mean, they're busy opening up OnlyFans accounts and Twitch streaming. They don't got time for that. Investing, they got nothing. They got no money. It takes all of their 80% of their pay is going to rent, and then the rest of it is going to I'm kidding. Whatever, some large amount. They're not doing well. Let's just
If 80% is going to rent, then you're basically like a quasi homeless, and you're paying for. I mean, what are you eating? What are you eating if 80% is going to your rent?
That's one of my favorite videos types to watch when I'm on TikTok or whatever. People complaining about, they spend $100 in groceries and they have enough to eat for 3 days. I totally understand that, and it is painful.
Yeah.
But they shoot it in a very funny way because they go, "Can you believe it?" Sort of like a Seinfeld-esque type thing. So I'm laughing because that's what they're trying to get. Plus, they get my view, so I feel pretty good about that. They get a view, they get a follow. That'll put money in their pockets.
I'm waiting for the day where there's mass immigration out of United States and into, Latin countries, people heading to India, trying to get into China, going, maybe the censorship regime is not so bad.
Yeah, well, us here in what is it called? Capitalistan. We have to focus on the tried and true methods of surfing the waves of bull and bear markets in order to make the monies that we need. Peter, I thought I've never been. I don't want to toot my own horn because I'm not. It's not like I'm investing a bunch inside the markets, but I've never been a better trader than I have been these days. Like over the last year or so, I've really locked in. Like I think I think I figured out the market.
Oh, famous last words.
No, you don't understand. You don't understand.
Right. You got a system.
And I would tell you all about it right now, but you got to buy my course.
Of course.
It's going to be $10,000 a year, but you can get it right now for $500.
It's a steal.
I mean, nothing. The amount of money you would spend on like sushi for 2 months or whatever, it's like nothing.
You're stupid if you don't do it.
Yeah, I don't even understand. How am I not being subsidized by the government so that it could be, given for in schools and for free. Wait, I got to get on that.
You got to get on
I'll-
it.
I just need a certain type of accreditation, and the government will pay me. What am I spending my time here with you losers for? Not you guys. I'm talking about the passerbyers, the people who aren't part of the acolyte group, the people who aren't part of the congregation. Those guys are losers. All right, Peter.
Yes.
Last week, so silver that ran up, right? Silver ran up, and it was an 11 sigma event. The run up in silver. All right, let me just pull that up over here real quick so you can see it. I actually made an indicator for this for Traders Post, so you guys can actually go to the traderspost.io if you have an account there, even a free account, and you can grab the indicator from their indicator library. It is a private indicator, but it's free. And I made it so that people can see what like multiple sigma events look like and to trade it. So here, if we get to silver on the daily, so this move up here, let me just make this, let's leave it like that. So this is silver, right? If we take a look at silver on the weekly, whatever, you've seen silver again and again and again. Let me hide these trades. All right. So these blue lines that you're seeing on the chart are different sigma levels. So the first one is 1 sigma, 2 sigma, 3 sigma, 4 sigma, all the way up. And silver made a high higher than the highs in 2010, higher than the highs of 1980s. It made a huge high. And it was an 11 sigma event by the time I got to over here, the peak of 121. And then we had a 3 sigma event as it sold off. So on the heels of a improbable event was another improbable event. Right? These types of moves, these types of crazy moves. I don't know if people remember this, but I've been talking about this for about a year now, that we're going to see unbelievable moves in the market in all over the place, everywhere. Just massive moves up and massive moves down. And that's what we're seeing. 11 sigma up, 3 sigma down. So similarly, inside of the NASDAQ, right? If we take a look at the NASDAQ, which is my favorite one of these, we had over the last few days, let's just take a look at this, a big sell-off from the peak of January 28th down to where we are right now. We had basically from peak to trough about a 3% sell-off, which in NASDAQ line is pretty big. All right. What I want to be saying here, Peter, and brace yourself because you might not believe it's true, but I think it is true, is that we are going to get about a 20% drop in the NASDAQ and the S&P.
What?
That's right.
When?
20% drop in the NASDAQ and the S&P. Correct.
By when?
This year. I believe this year.
Oh my God.
Let me see if we can pull something here so you can see it.
Then like a super fast rebound?
No. Well, what happens with equities, which is different than crypto or what have you, is that you have the derivative space, the option space that exacerbates moves, right? So what we call negative gamma. I did a whole series on it on the Sacred Prophet YouTube channel called the Negative Gamma Spirit Bomb, which is the ability for the market to just completely wreck a position, just wreck the market, right? Either up or down. It's what we saw in silver. Why did silver go all the way up? Well, it's not just because people were buying silver. That's the catalyst, right? China is buying a massive amount of silver. That's the catalyst. But that causes a short squeeze. And who gets squeezed? The people who are levered against silver, right? They have shorts on silver. They're levered against it, which means if they're levered against it, it means they have a bigger position than the money they have available, right? They borrowed money in order to short. Right. And as silver goes up, and the further that it goes up, the more negative they get. But they're more negative than just the delta, right? If silver's trading at $100 and they got in there, they're short at $80. They're not just down a $20 difference multiplied by the number of shares they purchase. They're down an exponential amount, right? So they might be down 10x, they might be down 100x on their position because they're levered. So what happens is that then you get the short squeeze up, so they're forced to buy, and the price goes up. But then as the price goes down, then you have the derivative space that forces the price down, 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 down. So you get these big, big, big whipsaws. We talked about it so many times. Go take a look at that video. It's 4 days I spent talking about it. It's a great, great introductory to the lesson. But we haven't had that yet in the NASDAQ and in the S&P, right? We haven't had that yet in the NASDAQ and S&P. What have we had? Well, we take a look at financial conditions over here. What we're seeing is in Bitcoin, Bitcoin is the precursor. This is what tells us what's really going on with liquidity, generally speaking, what really going on with liquidity, because it doesn't have the same option space as the NASDAQ and the S&P does, right? That's trillions of dollars worth of notional when it comes to the S&P and the NASDAQ, but Bitcoin doesn't have that. And so Bitcoin doesn't get to take advantage of that negative gamma move up. It's saying, hey, I'm down at 76,000. Right? We don't have a bunch of liquidity. There's not a bunch of money sloshing around the global economy. And this is an asset that's traded everywhere, right? So you can't just say, oh, it's just the US, it's just Europe, it's just China or whatever. Everywhere it's going down, right? And so you have this massive sell off. Well, this to me, one of two things can happen. Either Bitcoin, whatever has happened in Bitcoin stops and Bitcoin catches back up with what's going on with the NASDAQ and the S&P, or the NASDAQ and the S&P catches up with what's going on with Bitcoin and falls accordingly. That's what I think is far more likely. So let's just take these two things. Number one, for Bitcoin. Should we make the case for, actually, no, before we get to Bitcoin, let's actually start with.
Before you do that, you were talking about markets dropping 20%. Are you?
Yeah, so let's start with the NASDAQ right now and the S&P. So we take a look at the NASDAQ. All right. Well, I can't close anything else, so. All right. So we take a look at the NASDAQ over here. And I like to make this joke all the time, Peter, about things that go up and down and up and down, right? We see that all the time in the markets, up, down, up, down, up, down. It's just this oscillation that occurs again and again and again and again. Anyone can see it. It happens on a lower time frame. It happens on a higher time frame. It's just this oscillation. And then, so you have these waves that occur. And you can sort of assume that when you get to the crest of a wave, you're going to fall. When you get to a crest of a wave, you're going to fall. Get to a crest, you're going to fall. Crest, fall, and so on and so forth. So when you look at here, just looking at it, you go, okay, it could fall, right? It could fall because we're cresting up. And the bigger the wave up, the bigger the wave down. Now, could something like this happen where we keep moving sideways up, sideways up, sideways up? Of course. Of course it can happen. But that's where you look at other indicators, other tools to see, hey, what makes sense. So just looking at this right now, Peter, you'll see that when the NASDAQ falls in this way, we're looking at it falling towards this yellow line, right? This is the monthly average. It falls here, 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 here. So I totally expect at some point in the future, the NASDAQ is going to fall to that level again, right? That level is 24% down from where we are right now, around 20% down from where we are right now. And a bear market is defined in equities when we're down 20%. All right?
Right.
So when we take a look at that and we compare that to what's going on with the dollar, remember the dollar is the other side of liquidity. We're seeing here, actually, let me put it this way. So, well, no, let's do this first. We're seeing that the dollar fell from when Trump was first inaugurated till now. The dollar fell. And this coincided with the up that we saw in equities, right? So from Donald Trump's inauguration in 2025, this move up is what we saw, all right? This drop down here we had, that's because of tariffs. Generally speaking, the market went up and to the right to match what we saw with the dollar here, right? So this fell, this moved up because of tariffs, and then we fell down again. Make sense?
Yeah.
Actually, tariffs was over here. This fell down, tariffs over here, and then the dollar went sideways and then down. Now, there's a chance that the dollar falls from where we are right now, 96.20 on the DX futures, down further. Totally possible. I suspect, though, that we're going to be seeing maybe a little bit more of a down, but that we might actually be bouncing up. We're bouncing off this orange line. This orange line is a trend line for the dollar. That gets responded to multiple times, right? This orange line gets responded to multiple times, either on the other side or when it breaks above. So now that we're here, we can't take it for granted. We can't take coming down here for granted, because when we came down here, we bounced up. When we came down here, we bounced up. We came down over here. I suspect we might bounce up again. And the further we go down, the further we go up. Generally speaking, that could be the case. And so I was here at this break, I was very excited because we broke below here on the dollar. And then we sort of looked like it was almost confirming underneath this trend, right? Which would mean it would go down and we have a bunch of potentially a leg up in equities, but it didn't. We had the dollar reverse the other way up. This is in the midst of the US Treasury issuing dollars for Japan to help Japan with their bond market and their dollar currency problems. So as they're selling the dollar, as the US is trying to sell the dollar in order to shore up Japan, the dollar is still rising. This is a problem. This is a flight to safety. So if this continues and this gets all the way up, I wouldn't be surprised if we get a massive bounce in the dollar. How high can it go? 100, maybe more. I don't know. But if this is going to happen, then we are definitely in bear market territory and is very sensitive for equity assets. And I would expect to see the S&P and the NASDAQ respond with a drop. Remember, this drop that I'm talking about to this line over here is just where we were just last year, last spring, when the S&P dropped because of the tariffs. Just the threat of the tariffs, right? They weren't even like executed in the way that it was being described. Just the threat of them dropped the stock market 20%. So I think a 20% drop is totally normal, like totally possible, totally in the books, especially with our volatility in chief, Donald Trump. May his name live forever. And I think 20% might be the beginning of it. We might even see up to a 50% drop this year. But let's not get ahead of ourselves. So that's my case for the S&P and the NASDAQ. There's a liquidity problem. There's a global liquidity problem. We're seeing Japan has an issue. We already saw Bitcoin fall, saying, hey, we have a global liquidity problem. We know the option space is what's moving the equity space. And if that volume goes, if that support goes, it could be look up below. Any catalyst can cause us to drop from over here. All right. The last thing I want to bring up here is just this clip from Ken Carson, who talks about how the debt needs to be rolled over. Give me 1 second here, Peter. I was going to set this up. The debt needs to be rolled over. This is the final point, and it suggests that. Wait 1 second. I'm in the wrong place. And it suggests this is the catalyst that I would imagine seeing for a drop in the equity space. All right. This is from a small clip from a Ken Carson video that he did with Blockworks. Ken Carson is a fantastic, used to be a market maker. So he's one of those people who was there, understood the mechanics of how the market works and how debt affects the volatility space.
Inflation, they're not good for having buyers come and buy, not good for bonds.
Yeah.
And to remind you, refinancing, the reason that like a Shiller CAPE ratio doesn't work and has a lag over short periods of time, but works incredibly well over long periods of time. The reason that Shiller created that whole thing is there's a lag to how interest rates work. Why? Because everybody refinanced at 0%. Do you think anybody that was borrowing didn't refinance at 0%? Everybody refinanced at late 2020, early 21. What was the average duration of the loans that were taken out in 2020, 2021? 5 to 7 years. Where do you think
2.5% mortgage? Like they're going to hold that on to the very last second.
Yeah. The current rates don't have to go higher, by the way, for it to be an incredible drag on liquidity in the economy. People just need to refinance at the new rates. And the average, the next 3 years is 50% of all debt gets rolled over in the next 3 years. Because it's the 5 to 7, 8 year average duration. And by the way, okay, if they can keep rates here, it's still painful, very painful for liquidity, but but maybe that's okay. But guess what? When everybody needs to refinance at the same time, kind of creates a supply and demand imbalance. And so there's a liquidity draw that's happening too. And you're asking me where does the rubber meet the road? Rubber meets the road of liquidity. And that liquidity both happens from the bond kind of refinancing, and which is control the long end of the curve and what that costs and how people can get out. But it also comes from markets themselves, most reflexive, biggest driver of liquidity in the world. And that, to a great extent, is controlled by market microstructure, and that, which is part of the things I do with the vol flows and the kind of the von and charm flows and the timing of that. But it's also, the Treasury trying to get the Fed to help with the long end of the curve and refinance and send money. And that's why the tip of the spear is also the Federal Reserve and the passing of the baton.
All right. So just to translate for Peter. So we always talk about that here, forced buyers and forced sellers. We don't care about the people in the euphoria stage and the people who are just interested in dabbling their toes and traders and all that. We're talking about institutions and individuals that have to buy and have to sell, right? If your retirement plan is inside of the stock market, well, every year you have to sell a certain amount in order to be able to live. There's no way around that. If you are a pension fund, you have to do that. If you are the United States government, any government, well, you have to buy and sell bonds in order to finance your spending, right? And if you are a borrower, like I was talking about over here, borrowers, well, if they refinanced in 2020, 2021 at 0% interest or near 0% interest, if they just refinance now at 4% interest rate, if they just refinance now, well, then that debt that they have to roll over, right? The refinance, it means take out more debt in order to pay for the old debt. Well, that new debt is bigger, right? They got to refinance that at a larger percentage, and then their payment on that debt is way bigger. Can you imagine going from 0% interest on a debt that you borrowed, or when is it 0%? It's like 0.1%, 0.1%, some smaller amount versus now 4 times that? What would you do if your credit card bill was now 4 times bigger than it was before, right? Well, the amount of liquidity that's available inside of the market gets dampened. And we're seeing that effect here with Bitcoin, because they could talk about the liquidations in Bitcoin all you want. If there was a large flow of liquidity, that Bitcoin selling would get absorbed, and it's not being.
Doesn't this mean that with crisis comes Jerome Powell to the rescue, quantitative easing, cash flow injections? Isn't this what we've been waiting for, a crisis that sparks, the rescue?
We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people.
Yes. But when does the Fed come in on the white horse to save anything?
After the midterms.
After the crisis.
Oh.
It always waits for after the crisis before doing anything. It needs to, because it can't be seen as coming in beforehand. Because 1, how did you know? And 2, you're going to cause inflation. You're causing whatever. You guys were a big problem last time. Well, you're going to pump money in. We got too big to fail. All that stuff. They got to wait till after the problem happens. And so I don't see how that liquidity comes in before Jerome Powell leaves. Jerome Powell's not going to turn on this faucet and walk out the door. Okay. They pause this time. Next, the Fed is probability says that they're going to pause next time. He ain't trying to leave doing what Donald Trump asked him to do to begin with, right? So then we have Kevin Warsh coming in to be the new head, and the question is, what are the voting members going to do then, right? So he's coming in May? So it'll be a few months before things can really start going, before even if they decided to cut rates or telegraph they're going to cut rates, that's still going to be a few months out. That's where I think the liquidity storm comes in August, right? That after we're in March, we're going to get to a period of weakness. We're going to have a drop in markets. I think then they're going to start talking about, hey, what we need to do in order to fix things. People are hurting, blah, blah, blah. And then come June, which is the next period of weakness after that, some problems, come in with a white horse and start injecting money into the markets. How much money do you inject? Forever? And I think that's what coincides with the shortest, shallowest Bitcoin bear market on record. That's right, folks. I think Bitcoin is a bear market now, as proven by price action. Just as a little round the bases here, a little victory lap. The price action we're seeing right now is basically exactly what I've been calling for the last several months, right? Let's just take a look at the chart because I think it matters here. We talked about, let's go here to Bitcoin. Yeah, let's go to this one. So remember, folks, we said way back in August that we're looking at October 20th as a potential top for Bitcoin around that period of time. Remember, even though we were thinking, hey, we might still get $250,000 on Bitcoin, I was like, yeah, but I'm cautious about this because sure, it can jump up from $100,000 to $250,000 in a straight line, but as we get closer to that October 20th level, is it likely to occur just like that? No, I'm not stupid. No offense to Tom Lee and Arthur Hayes and all the people who are calling for $250,000 Bitcoin by the end of the year. No offense. Y'all tripping. All right.
Okay.
That was crazy. No, honestly, how can you be there in November 2025, and they're asking, hey, you think Bitcoin can still hit 200,000 by the end of the year? They say yes. Okay. Anyways, so we're here in the land of the reasonable. We speak to the Lord of Liquidity. The Lord of Liquidity was saying the faithful have not shown themselves to be full of faith. All right? And so the rains will come.
Okay.
The land will be barren.
The rains will
Gnashing of
come.
teeth.
Wait, the rains
so-
will become or the land will be barren? I'm pretty sure those are two different things.
Peter, can you please try to keep on track here?
You're
Right?
saying
It's one thing for you not to understand what's going on. It's another thing for you to interrupt me while I'm in the middle of one of my rants.
I understand what's going on. Are you saying that? Okay, you're saying that if you were calling for 250,000 Bitcoin before October, before November, then that made sense. But after October, it doesn't make sense because weren't you calling for crypto to be high up?
I was going for that in spring of last year. But as we got closer, especially around June, August, we're like, hey, look, it's not looking very good. It's possible, but we know it's a stretch, right? And then when we got into September, and I said, look, I'm not going long here. I'm not trying to go long here hard until I see what happens after October 20th. I said that week after week after week. I want to see what happens after October 20th. Everyone's saying the 4-year cycle is over and it's different this time, and this time is different, and the cycle has been extended a year and all that sort of thing. Okay, I totally understand. I'm willing to listen, but I got to see price action. Well, we didn't even get to October 20th. Why? Because 1010, a day that will live in infamy. 1010. We had, the largest liquidation in Bitcoin history because of that Trump tweet about, hey, something about China tariffs 500%, some nonsense like that. And then boom, the market fell. But it wasn't just that the market fell, it's that it also caused a chain reaction with Binance here. I think it's worthwhile just reading this post from Bitcoin News over on X, Bitcoin News.com, who lays out this claim here from a Star Zoo founder of OKX, who talks about what happened on 1010. All right, Peter, you want to read this for me here?
OKX Exchange CEO blames Binance leverage loop for catastrophic 1010 market collapse. Star Xu, founder of OKX, argues that the 1010 crash was a man-made crisis fueled by Binance's aggressive push for market dominance. The trouble began when Binance officially integrated USDE, an external stablecoin, directly into its core financial plumbing. Binance launched a massive marketing campaign offering a 12% API just for holding USDE, specifically to lure users away from competitors like USDT or USDC with much stronger track records. Critically, Binance allowed USDE to be used as collateral for high stakes futures and margin trading, treating it with the same trust as actual cash. While Binance marketed as a stable, reward bearing asset, USDE is actually a complex synthetic dollar that carries the structural risks of a hedge fund. Binance's system enabled a dangerous leverage loop. Users use USDE as collateral to borrow USDT, then use that USDT to buy even more USDE. Oh boy.
Sound familiar? Does this sound like, I don't know, Luna Terra USD collapse from last cycle? Does it sound familiar? Infinite money glitch? We're all gonna make it? All right, continue with this. This recursive cycle on Binance's platform inflated returns to 70+%, creating a massive bubble of hidden debt that was invisible to everyday investors. By October 10th, Binance's internal market was so overleveraged that it had become a powder keg waiting for a spark. When the market dipped, a large institution on Binance was liquidated, forcing the system to dump massive amounts of USDE at once. Because Binance's internal Oracle price feed failed to keep up with the crash, the price of USDE on the exchange plummeted to 60 cents, while remaining stable everywhere else. So you had a stable coin in one place at $1 and other places at 60 cents. Not very stable. This depeg on Binance triggered a catastrophic chain reaction of $20 billion worth of liquidations, wiping out traders who thought their collateral was safe. Star notes that this event proved how an exchange's own marketing and technical flaws can cause a global market meltdown. Star believes the industry must stop allowing exchanges to run short-term yield games that put on blah, 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 blah. You hear the rest of it.
Who
Guys,
posted this?
this was from Bitcoin News.com on X. All right. So this big liquidation happened on 10/10. I remember hearing about it. We didn't know what happened behind the scenes. This sort of like came out afterwards, sort of like the JFK assassination. It was slow dripped, and we only found out later on that some big thing happened because it happened behind the scenes. But when I saw that happen, people go, "This is the biggest liquidation ever." I go, I remember something like that last cycle. Let me see if I have the chart up here.
We don't have to spend too much time in the past.
Yeah, okay. I'm just gonna say this real quick here. This is a chart from last year, and there was something like, where was it? I think it was here from Bloomberg. Just then, Bitcoin drops more. This was from this is on January 2022. Right? This is right over here. Just then, Bitcoin drops more than 50% from its record high, extending a crypto meltdown that erased more than $1 trillion in value. I was like, that sounds familiar. That sounds familiar. I think I will not be going long Bitcoin just about now, just about 10/10, just about now. And then we saw the drop of Bitcoin that happened underneath our line in the sand, our volume weighted moving average for the year. And that's where we said, hey, what are we looking for, Peter? We're looking for a confirmation back above that line. We're looking for the price to go back up. It didn't and fell right from there. We looked for a rise up to that level, right? That's what we were looking for, and for it to confirm to the downside. And confirm it did. Just like it did last cycle. Went up and confirmed the downtrend. So where are we right now? Well, we're right about here, son. We're right around 40 to 50% of the way down, and we got a little more ways to go. Where do I think we drop? I think we drop. We go sideways here for a little bit, and that we drop down to around $56,000 on Bitcoin, at which point I will be buying with two hands. Because at that point, people are going to be saying, oh my God, Bitcoin's going to fall to 30,000. Bitcoin's going to fall to 20,000. You mark my words. Why do I think that? Because I'm a prophet. And prophets look at past cycles in order to see future cycles. And what did they say last time? If we don't see Tether or Binance fall apart, I think Bitcoin bottom is a panic stab down to 8,000, but mostly going to foot around 11 to 14,000 for a long time. Both things were false. We did not drop to 8,000, and we did not stay here but for a month, but for a fortnight. before he rolls back up. And when we're rising back up, the people say, hey, yeah, we're above this level over here. It means we are inside of a bull market. Hell no. Hell no. People were still calling for price to fall. Can I find that actual tweet? No, never
You don't
mind.
need it.
So that's what we're going to see here, folks. We're going to see the price potentially move a little bit sideways. We're going to see further liquidations. Further, we couldn't see this coming. More SPF, more magic box money. And I couldn't believe it. And then when we get down to 56,000 and people are calling for 20,000 and further, that'll be your sign to put on your big boy and big girl pants, right? Put on your big boy and big girl bra, and you just buy. Not financial advice. Do your own research. But look how far you've fallen when you've done your own research. Isn't it crazy? Isn't it time you stop doing your own research?
No, it's not.
Well, intents and purposes, no, you should do your own research.
Question though,
And thoughts expressed by Tom Hartman are not. I'm sorry, expressed by Sacred Prophet are not necessarily held by Tom Hartman.
right? Pretty sure that won't hold up in court. If we know it's going down to 56K, I don't know. Seems to me to be a great opportunity to make some money.
Yeah. So initially, when I was talking about this a few months ago, I was like, "Hey, shorting would be the thing to do. You want to hold the crypto shorts." I was like, "Oh, that's fine. That's fine. You can do that. That's definitely great." But I've been enjoying poly market bets because what happens is that, like right now, let's say you just put on a short right now and you held it down to 56,000. You'll make 30%. If you put on today, you'll make 30% if it gets down to there, right? So that's 45 times your money at 50x leverage. But you got to hope for no 2% bounces up. So you have to reduce that leverage, and so maybe you could really just get 20 times your money, 10 times your money. It could be a little bit rough, right? I totally understand for people who are not used to leverage in crypto. Plus, you gotta put money in an account. You got to transfer. You could get a stable coin or a coin. You got to transfer to an exchange. You got to put it on. You got to place the bet. It might be a little bit too much for some people. For those of you who know what you're doing, go for it. But for those of you who want something a little bit simpler, polymarket bet and prop firm trades to me are de rigueur. Because I just did this in an experiment the other day.
De rigueur.
It's easier. It's just what one should do. Sorry, it's de rigueur is Spanish for
No, I don't need you to explain de rigueur.
rigor.
No, I need you to just say what you're saying without ending it with something that 90% of people are not going to understand.
Peter, if you've ever heard of Terence McKenna or Alan Watts, that's how people know you're smart.
No, we're no longer in that age. We're in the TikTok age. TikTok brain.
Right. So I placed a bet on Polymarket. Hey, let me just short. I know Bitcoin's going to fall. I know Bitcoin's going to go to 80,000. I knew Bitcoin's going to go to 80,000 quick. So I placed a bet. Bitcoin would go down to 80,000. I didn't even get the best price, right? It was just like a small move, and I made 60% on my bet. I was like, oh, wait. I like this a lot better than crypto futures when it comes to the downside, because these bounces can be pretty crazy. So what happens is that since we know because of our indicators, we have an idea of what level things will get to. What happens is that when the price bounces, right, when you get these, let me just zoom in over here. So what happens is that when you get down, let's say something like this happens. Actually, let me show it to you on prop. All right. Okay, so let's say over here. So I reasonably, I knew Bitcoin's getting 80,000. I had no doubt Bitcoin's getting 80,000. So over here, once this bounces up, what's interesting is that when it bounces, the odds on Polymarket change drastically. Like, because it's such a short time frame, and I'm betting that it's going to get there by whatever, January, February, whatever it was, because I know it's going to get there in such a short period of time, when it bounces up, the odds go completely against you. And so the cost of that bet goes down dramatically. And then I place the bet on, and then when it falls down, now it goes into my favor. So I'm able to make 60% of my money on just this move from over here to over here. And I've placed other bets since of, hey, will Bitcoin get to 65,000? Well, since I think Bitcoin's going to go to 56,000, yeah, I'm going to bet that Bitcoin gets to 65,000. And I'm betting that I'll get there in February, right? So a
Hmm.
bet like that can generate, let me see what the actual amount is that you can get. Give me 1 second here, Peter.
Yeah, sure thing. Hello to everybody in the chat. I see you there. Seb's got, Seb says, metal sold Friday, crypt the weekend, the SPY next week. I guess we'll see about that. Oof, everything's selling off. Yeah, I think you might be right about that, Seb. And thank you for agreeing with me. Oh,
All right, here. So a bet for on Polymarket, if you were to bet what price will Bitcoin hit in February, right now it's priced at 22% for 65,000. So a $100 bet on that makes you $434. So that's 4 times your money if it hits. Right? 4 times your money if it hits. So I like that kind of bet because I'll risk the position because it's not that much. And even if we don't get to 65, let's say we just get to 70, this position might still give me 200 bucks.
Hmm.
And I like those types of trades. And then whatever money that you take from over here, you toss it into your Bitcoin because I want to be buying on the way down so that when it rises back up, maybe I'm off. Maybe it doesn't stop at 56,000. Maybe it goes to 50,000. You know, maybe it works down. I don't know. Maybe it doesn't even get all the way there. Maybe it stops at 60,000. So then I want to be buying on the way down so that on the way up, hey, I've been accumulating on the way down. But I use the profits that I take from betting short to then buy long. So I'm long and short at the same time in 2 different things. I'm short the volatility, or I'm using the volatility to short in the odd space, and then buying levered Bitcoin on the long side, right? Because I could buy levered Bitcoin now at 5x, right, and not have to worry for that I'm going to get liquidated, and they'll just have that right up, and I'm not just buying 1 Bitcoin, I have 5x Bitcoin. So when it moves up, I make that much more. So this is where I'm using leverage to my advantage, but I can only do that because I have an idea of where these levels are, how far we can go down, and that sort of thing. I have an idea of the path that we're going to take.
I thought that Americans couldn't participate in Polymarket.
They can. They can do it in on Kalshi, I believe. I can't go on Kalshi because I'm Canadian, so I can't get into the Kalshi website. But I mean, I know Americans find their way of using Polymarket because
They
it's
shouldn't.
right for the Americans.
Don't do it.
I'm not recommending that you do. I'm
not
just saying
recommending that you do.
I'm not recommending that you do. I'm just saying that Americans do it. do.
I said
So-
I said that I laughed at Dudu one time in a meeting that I had, not a meeting, I was giving a talk, and that person they just shook their head. I never saw them again. They never joined. They never came back to the group. Childish over here a little bit.
Look,
Yeah, have a little fun.
I'm undoing it. It's done.
Look,
You
if
chat.
I was going to bring up more conspiracy theories, maybe I shouldn't.
Yeah, we're just getting our views back up, Peter. Let's not.
Yeah.
So I'm doing both crypto futures and I like Polymarket or the better market in order to trade that way. And in prop space, well, we've gone over this last week. We used our levels indicator in order to get our trend indicator in order to understand, hey, how do we want to navigate here? In fact, I think I'm going to do a video. Maybe we'll hop on, Peter, tomorrow night and do a quick stream just to show active trading using levels, because the trades that we did last week was fantastic. It was a great setup for that. And there's more setups like that coming for the future. One thing I want to end on here, a little housekeeping note I should have brought up at the beginning, is that you guys will notice new versions of the levels and wave scripts now in the Sacred Prophet library. So if you already have the indicators on your chart, if you just refresh, remove the indicator, add it back on, you'll notice there's new features to them. I upgraded them in order to have more flexibility, for it to look nicer, for it to run faster, for it to be a little bit clearer, better tooltips, a bunch of different things. You guys can take a look at the details inside of the release notes on TradingView if you want to see. But it looks better, works differently. Fantastic. And I also added a new indicator called level, which is like levels, but levels already, it has like 4 different levels inside of it, and it's expecting you to have anything from the daily all the way up to quarterly and weekly and monthlies and all that sort of thing. And that might be a little bit too much for people. So I created an additional one called actually, let me just show this one real quick, Peter.
Yeah.
I created this additional one called level, and it's just like levels, but just for one. Let me get it here. What's great about it is, oh my god, futures open and it's already down. We're already falling. Oh my god. I got to get to trading. So what's great about this one is that you have a new option, and it actually exists in the other one too, but you have an option called session time, where normally I'm giving you the VWAP of the overnight. It's like the volume weighted average price for all of the candles. But a lot of you guys only trade VWAP for a specific session, right? Maybe just the US session or just the Asian session or whatever. So you can turn on this. You could switch this to, let's say, session time. And now the VWAP will change to only calculate the VWAP for the trading session. So you get that level. And all the mitigation levels will change accordingly. But I also added an option for both, so you get both the extended market hours and the real-time hours all calculated together. Yes, with the mitigation levels for all the different individual ones. So you're going to see double mitigation levels show up. Why did I do that? Because I was seeing the price responding to both of these. So, for example, over here, you'll notice here, the level below, this is the overnight VWAP, so the price went exactly there, but then it also went a little bit further, and I kept asking myself, why is it going a little bit further so many times? Well, it's going a little bit further because there's another mitigation level over there from yesterday's VWAP, the session VWAP, right? And so, and this sort of thing happens again and again over here. We wick down through both these areas. Why didn't we just stop over there? Because both these areas were nearby.
That's funny.
Anyways.
I noticed that I started in the Profit account. I noticed that it would go past it, so I just always assume whatever the line was, it would go a little further than that.
Right. Right. But there's these extra levels that are there. Also, 2 hour, the 15 minute, there's all these other levels. But we didn't have until today a way of seeing these custom VWAP levels. And because it's just one indicator with one time frame, you can add this again and again into your chart and just show different VWAP levels that you want. And you'll notice that it says it's showing green and red for the trend. So if this is off, you're just going to see it as the normal one. And if it's on, right away you can look at it and go, oh, I'm in bearish mode, I'm in bearish mode, I'm in bearish mode, I'm in bullish mode, which to me has been super useful for trading during the day. But we'll do a special video for that, showcasing all these new features and more on later on this week on one of the daily breads.
I gotta tell you, there's a missed opportunity for the name of that indicator, solo leveling.
Right. That's an anime, folks, if you don't realize it. And yeah, don't worry, you don't have to put it in the chat. I'll play it for you.
Before we go, can you what are your thoughts on silver right now?
So silver and gold to me are different, right? We're having silver run up because of a commodity shortage.
Can you load the silver chart?
Sure. So silver is riding up right now because of a commodity shortage. That means China is buying silver hand over fist in order to get they want to stockpile an amount for it. Look, we're in fourth turning. There's all kinds of geopolitics happening right now. Suffice it to say that the countries are trying to store up. Hey, we might not be able to go to the store anymore in order to buy silver whenever we want to. Let's stock up. We saw this with silver. We've seen this with gold. We saw it with nickel. We saw it with wheat. We're seeing it in different commodities. So that's what's running up the price. However, for the people who think you can get the 500 silver, this is what people think, that the futures market could just go to 500 silver. Commodities are not the same thing as other equities. They're not like the NASDAQ. They're not like the S&P, right? When you have to deliver a futures contract for the NASDAQ, you just deliver cash or the futures contract, right? Same thing with options or whatever. You're just delivering the underlying or cash. Futures, you have to deliver the freaking thing. If you have oil futures, you got to deliver oil. You got gold futures, you got to deliver gold. Silver, you got to deliver silver. And the guy on the other side, usually before now, they just wanted the cash. But a bunch of them now are like, no, I want the silver. Well, the COMEX exchanges, these exchanges have to deliver the silver. And so they got to put a stop to this. Why? Because there's way more paper silver than there is physical silver.
Oh dear.
Way more.
Is that legal?
And so how do they slow it down? The way they slow it down is by increasing margin requirements, right? I'll even share a post about this on the Sacred Prophet X channel if you want to see, but basically they make it more costly for people to hold these positions. So what'll happen is that if there's any fluctuation in the price, one, they have to put more collateral in. You got to get more money to put it in. If they can't get more collateral in order to cover their position is automatically liquidated. Boom, price goes down. Then also, if the price falls, then the margin requirements might also be triggered as well, and so it causes these cascading failures of price. Add to that the market makers, who are, if they're in negative gamma mode, are exacerbating the price, which means that as the price falls, they also have to sell, not for any nefarious reason, just literally to hedge their books. They need to sell the derivative or the underlying asset, and that causes the price to fall. So we saw here on the silver chart, silver went up to $121, fell as low as $74. That was a drop of about 39%.
Wow. Oh my God.
Now, is this unusual for silver? No. If we take a look at silver in the past, we'll notice that the silver, when it rises like that, often will do that, will fall suddenly.
You said that
Will
that was
fall
going to
suddenly.
happen.
Yes. When? I don't know, but well, because it has to happen. Silver can't be at $500 an ounce.
Right.
They literally can't let it. The physical silver can. They can't stop you they can't make you sell it. Well, they can, and they might in the future. They did that with gold. They made it illegal to sell it at a certain price, but whatever. They renewed it for $35 an ounce. But in general speaking, they can't force you to sell your silver at a lower price, but they can make the futures contracts. They could essentially peg the price. All right. At least short term, while they figure out, how to get more silver, how to distribute it. There's all kind of shenanigans that happens behind the scenes. So the big question is, has it topped? Silver fell as well as gold, right? Gold fell as well. Not as far, but gold fell from its high of 56,000 down to 48. A Schiferian move downwards. We got as low as a 16% drop in gold. Now, gold is different because it's mainly the central banks that are buying gold. Again, preparing for World War III and the end of the fourth turning, but that's another show. Still, I don't know about silver, but I think gold perhaps has topped. Has topped. We won't go in today. We might do it next week. But gold often tops before Bitcoin rallies back up. So you get this rally in gold. Gold then sells off, and a little bit later, Bitcoin shoots up.
A little bit later, meaning
happens.
A little bit later, meaning months from now, August?
Yes. In the macro space, it's always months. Yes. This is another reason why I think August might be the time, or near in August might be the time where we see a big rally in Bitcoin.
So when it comes to silver, short silver?
God, no. You don't short parabolic moves. Are you out of your mind? It's insane.
Well, what's going to happen?
Do your own research, not financial advice. Do not short silver.
That's how I lost.
Sure, you trade intraday in a prop firm account where all you can lose is the cost of the account. Fine. Don't go freaking put $25,000 to short silver. That seems crazy. All the money I could make. Oh my God. You know how you can save $25,000 by not doing that? Crazy. Gold though. Gold I might short. I mean, not me, but I wouldn't be against shorting gold because it's not as volatile as silver. Silver is being all schizoid and autistic when it comes to its price movement, but gold is the. Wait, is that going to get us banned?
Yeah, don't say it. It'll
Better
say
not
it.
mention it.
Why don't you create a Polymarket bot that will look for a bounce and then buy Polymarket bet?
I will. That'll be one of the things I'm doing. The next thing, what I'm doing right now is focus on Gamma. I want options information, like how to navigate that, to be available within our dashboard. That's what I'm working on at the moment. To me, that's way more interesting, if not more profitable. But it's been invaluable to me to use gamma information to know, are we in negative gamma regime and how strong is it? Or are we in positive gamma regime where price gets pegged, right? To me, super, super useful. That's what I'm working on. But yeah, we could build a bot for Polymarket that does this. The problem I have with building the Polymarket bots is that there's so many bots on Polymarket that, especially with the AI boom, like these bots are just spinning up, that it's almost ruining Polymarket. It
Right.
might actually be the death of it.
Right.
So it's sort of like, I don't want to put a bunch of eggs in that basket. Let's just place our bets, because what matters for the bots is that we're trading the odds at the time. Whereas I really want to, like, I would just recommend that you just place your bet and just wait to the end of this thing, like for a yes or no for the thing to pay off, because otherwise you can get rinsed out inside of the markets. There are bots out there that are tricking other bots to make it behave in a certain way, and then dumping on them in order to extract money from them. I'm like, I'm not going to be sitting here trying to bot fight with some other, you know, degen who's all about that poly market. Like, too much.
Do you know any way that Claudebot or Moltbot or OpenClaw, do you know any way that you can use that to help you with trading? Anything to do with trading?
Yes. Caveat: huge security risk with OpenClaw. I mean, massive security risk. But assuming that you're not giving it any personal information, you're not giving it access to anything that's damaging your emails, your credit card, or anything like that. Yes. So this swarm process with agents in order to analyze data and then come to certain conclusions, super useful. Whether that's analyzing charts, whether that's looking for arbitrage opportunities, imbalances in different markets, and making split-second decisions in a way that you can't. Maybe you're sleeping, you're busy, or you can't move that fast. Super, super useful. In fact, we're going to be trying out some of those things pretty soon and making some of the discoveries that we've made available to people specifically in the Sacred Profit community. So if you're interested in following along with that, you can go to sacredprofit.com, sign up. Even if you're a free member, you'll get some information, and you'll also be able to go on the Sacred Profit Telegram group, where that's where you get the daily threads, the daily information about what we're thinking, what we're doing, and what's going on, what kind of trades are interesting.
I think it'd be a good idea if you posted on X or in the Sacred Profit Telegram group sources that you would give the Claude bot or the OpenClaw bot in order to do its swarm analysis. But can you think of a few sources now that you might be able to tell people that, hey, this is where you should point your AI bot to?
Well, for one thing, you can have your bot just look at your computer screen. So it can have access, it can look at your trading view or whatever charting software you're using and like navigate it. It can do all kinds of different things. Like it can basically use it just like you can. And be careful, some things are against terms and conditions, but using TradingView and feeding that to your bot, super useful. Basically, the only thing you can do is use market data. For the market data part, you can go to massive.com and sign up for a subscription there as a personal user, and you get access to historical and real time stock, options data, and some crypto. Not futures yet, but that's supposed to be coming any week now. We're waiting for that. You feed that sort of information to your bot, and it will be able to recreate all kinds of different strategies and techniques and analysis in order to come up with stuff that you might want. Super, super useful to do that. So massive.com and TradingView are two things you can feed to your AI in order to discover new strategies or techniques.
I was trying to think here just before we go. I was trying to think about an addition someone could put in their prompt to Claudebot, to OpenClaw, that would help them fine tune their AI to kind of pay attention to things that maybe a regular trader wouldn't, like time based or something like that. what would you recommend people add, if anything, to their prompt for an AI like Claudebot or OpenClaw in order for it to be kind of guided in a direction that's less ordinary and perhaps more profitable?
There is one thing. Let me just show it to you here. Just the idea. I think I have it on my Twitter. Let me see if we can pull it up. 1 second here. Here, this
was
is from
actually-
Danny Postma.
Go ahead.
And this is so he says this is single-handedly the best Claude skill someone ever shared with it. It uses Claude's ask user question tool, the one that plan mode uses, and starts absolutely grilling you about every detail. The output is a super detailed spec file that you can use to create tasks with. So essentially that plan mode that will then generate questions, you're forcing it to ask you more questions, and it'll solicit from you things you might not even realize to ask the AI, right? And so this I find super useful. I was just actually talking to John from the CEO of Traders Post just last night, and he had this happen to him when he was talking to the AI. It asked him questions he didn't realize he needed to ask, and it made his whole thing way better than he thought it would be. So the secret is within you, and the AI sometimes is able to ask you questions in order to unleash that. That would be the thing I would recommend.
Fantastic. All right. I'm also going to be pointing my AI to Sacred Prophet YouTube channel and be like, read the transcripts, ignore the conspiracy theories and give me the good stuff. Are there any insights here that are perhaps unusual but strangely helpful? I think AI might find something.
Can't make money on conspiracy theories. There's no public market for that.
Well, someone can. Well, let's not say her name. she must be making some amount of money. All right, Tom, that's fantastic. It's cool. Lots of excitement happening in the world today. I want to remind everybody that if you want to be a high value trader, you follow Sacred Prophet. What's a high value trader? A high value trader is a halo trader, HALO, high earning, AI leveraged, level headed, overflow. If you want to know what that means, you can check out past episodes or subscribe for more. It's coming. All right, Tom.
I'm so excited the bear market's finally here. So excited. So much money to be made.
I think you're the only
And
one.
then on the bull side, Peter, I'm going to be able to get in on the bull market at the bottom tick. I'm going to bottom tick that. Get it all the way to the top. How did you know? How did I know? I'm Sacred Prophet, damn it. I'm Sacred Prophet, damn it. I speak to the Lord of liquidity, and the Lord of liquidity speaks through me. Just pure dopamine when I play that sound.
I like what you've been saying, that this might be the shortest Bitcoin bear market and that it might rebound solidly in August. I mean, that's that's exciting.
The only question you have to ask yourself is, if the stock market is down, do you think that Donald Trump might be the kind of person who would flood the economy with so much money as to dwarf what happened during the COVID lockdowns? Is he that kind of guy? If you tell yourself, no, there's no way, he's such a responsible president, he would rather that the Democrats win than ever do something to cause long-term damage to the United States. If you think that, okay, then I'm wrong. If you think the other thing,
Right.
that he's like, money's free, it's infinite. Let's give it out, let's just pump it. Well, shortest and shallowest, Peter. Shortest and shallowest.
Oh, wow. All right. That's it.
Bye, guys. We'll see you guys next week on another Sunday Fuel.
All right. That's a lot of fun.
Yeah.
Bye, guys. Like and
Get through
subscribe,
all my
folks.
history, all my tweets and stuff like that, all the past tweets that I showed, all the liquidations that are happening right now are happening just like it did before. I'm just waiting for false profit sailor to get XPF. You know what we said the other day? If Bitcoin falls to $0, or if Bitcoin falls to $1, we'll just buy all the Bitcoin.